Welcome to Advanced Audit Assurance Code of Ethics for Professional Accountants. What is ethics? Ethics is basically a study about what is right and what is wrong. It's not actually what is right or what is wrong. It's a study about what is right and what is wrong. If you look at ACCS syllabus, the ACCS syllabus have been giving so much of emphasis on ethics from the stage one, right? From the stage one, if you can see, the ACCS syllabus have been giving you a lot of emphasis. In part one, there was actually part one, you would have got introduced to what is ethics. Part two, you would have part two, when you studied F8, you would have learned about ethics. Part three, if you have done SBL, the Strategic Business Leadership paper, you would have learned ethics. And in auditing paper also, now you are learning ethics. And once you complete your ACCA papers, before you apply for the before you are applying for the membership, you have to pass an ethics module again, right? Actually, you don't have to study or anything like that, but you have to just sit for the examination. And that exam also, they do not correct all the answers. They only select some of the candidates and they check the answers only. So yeah, it's not more like an exam, but more like a compliance requirement for you to get the membership. So that's what they do. So the ACCA places so much of emphasis on ethics, not actually because accountants have to be ethical, right? Now let's see what is ethics. Ethics is a study of what is right and wrong. It's very difficult to define in this world what is right, what is wrong. What is right, what is wrong, generally depends on your point of view. If you think it is right, it is right, and if you think it is wrong, it is wrong. Say I'll give you an example. Like, so you see, because there's something called proximity. So if something happens to people who are close to us, or if something happens in an environment which is close to us, it hurts us a lot. But if it is happening far away from us, it doesn't hurt us that much. For example, say a bus went on a bridge and fell down into a river, and maybe around 40 people died. For us, it's a sad news, right? By any chance, if one of our relation or friend got caught in the bus, then that's much bigger sad news for us, right? So it's like this. I heard in America, 40 people died when they are going in a bus accident. It's a news only for me. I don't feel that much worried about it. It happened somewhere close to Colombo. It happened somewhere in Trinco, or it happened somewhere in Baticolo. Then I'm a little bit worried. It happened in Colombo near my residence. Then I'm really worried about it. And inside that, one of my friends was there. I'm totally devastated, and I'm really worried about that problem, right? So you see, it's only one, like 40 people died in an accident, but how close we are to the problem decide whether it affects us or not. So ethically also same. If you hear in Lebanon there was a bomb blast, or in Lebanon Lebanese army killed somebody or something like that, it doesn't affect you that much. But if there's a bomb blast or whatever in Colombo, it affects you a lot, and you want to make sure that people are properly punished, who are responsible for it. Likewise, so if I'm sitting in Colombo and taking a decision about somebody's ethical matters in Africa, then I'll be more lenient in my ethical decision making. If I'm sitting in Colombo and deciding fate of Colombo people, then I'm a little bit more concerned about my ethical decision making. So again, if I go back to the example, 40 people went on a bus and they fell into a river and died. For me, it's a problem, right? But next day, I go and catch 40 fish and burn them and eat them. It's not a problem for me because close to humans are not close to fish. Same news, if fish heard that 40 people died, the fish will be very happy. Why? Because humans eat fish, and 40 humans passing away, it's a good news for fish because there's going to be less humans to eat them. On the other side, some fish may be thinking, okay, that's good because some bodies will be left out in the sea, then that can act as a food for them as well, right? So what is right, what is wrong, always depends on the angle you look at, your perspective, your perceptions. So if you allow everyone to decide their ethical codes and act according to their ethical codes, which is actually what's happening, it's very difficult to act as a profession. So that's why people always group themselves in a particular ethical ideologies, right? So if you look at the religions were formed based on some of the ideologies. So certain people believed in not killing animals and being good. Sorry, not good, like not being killing animals. They are being good, being what you call faithful to a philosophy formed one type of religion. People who thought sacrificing animals is good for gods, and people and they believed more in punishing the bad people rather than being good, formed a different type of religion. And the party went and formed another religion, and there's something called Scientology, where they I don't know much about Scientology, but what I would like to say is like whatever scientifically proven is what right, and there's some sort of a movement of religion. So people now group themselves according to the beliefs and the philosophies which they follow. That's in your life. When it comes to accounting, you can't allow every accountant to think on his own when it comes to ethics. All the accountants in the world has to follow some sort of an ethical framework, like all the Christians follow the Bible, all the Muslims follow the Quran. So then only they can identify themselves as a group. So if you are going to identify ourselves as associate chartered certified accountants, we have to follow one type of an ethical code. We can't allow everyone to think on their own. ACCA's top body, the IFAC, International Federation of Accountants also thought about it, and they also decided all the accountants should have only one ethical framework. We can't allow American accountants to practice in a different way, Russian accountants to practice in a different way, and Colombo-based accountants to practice in a different way. We can't decide like that. So we have to have one accounting framework, one accounting terminology, ethical framework for accountants. That's what IFAC also thought. With that thought, IFAC went and formed a subcommittee called IESB, International Ethics Standard Board for Accountants. And from that, they rolled out a principle-based code of ethics for all the accountants. So in that ethical code, they basically gave principles and they asked accountants all over the country to comply with those principles, right? And they put prohibitions as well. These are things you can't do. Then adapted the same code of ethics for their members. So that's why we are going to learn today the code of ethics, which is developed by IESBA and followed by ACCA. So ACCA obtained their code of ethics, included that into ACCA's rulebook. So as future ACCA members, you will have to see the rulebook. So ACCA has every year ACCA releases the ACCA's rulebook. So here you can see the ACCA's rulebook. You can download the rulebook here. So if you have any problem, any ethical problem, or if you have any ethical problems or any matters, any issues, you can always download this rulebook and see. For example, Code of Ethics and Conduct. You want to see what does ACCA is about certain problems what you are going to face. So the ACCA rulebook has all the details. So if you want to see the bigger version or the full version, you can download here and always you can go through. But for you to see a syllabus or to pass P7 examination, you don't have to do that. But once you become a member, whenever you face a problem, it's always good for you to refer this section and clarify your doubts. So the Code of Ethics for professional accountants. Why accountants need an ethical code? Section I'm going to the ACCA's Code of Ethics. You can download from here, and you can read. If you have any problem, anything, if you want to clarify regarding any ethical problem, whatever you are facing, you can download and you can go through. Okay, fine. So let's look at why we need as an accountant. Why do we need the Code of Ethics? Now, accountants may face a lot of ethical problems in their day-to-day life. For example, sometimes my boss will pay a bribe payment to some politician, and will come back and ask me, "Hey, record this transaction." Can I record? I have a problem. Because it's an ethical problem. Because if I refuse to record, I'm not loyal to my boss. If I refuse to record, my boss can chase me out of the company. If I record it, I'm not loyal to my profession. I'm not complying with the legal requirements of the country. I had to report that to the authorities. If I report it, I am failing my duty of confidentiality, which I owe to my employer. So there's an ethical tension. So whenever you have an ethical tension, you have to have a way of finding what is the real situation. Why is ethical tension is being caused, and you have to have a way of clearing that ethical tension. So basically, this Code of Ethics helps us to clear the ethical tensions faced by the accountants. National Code of Ethics, IFAC has given the Code of Ethics, ACCA's Code of Ethics is there, both are same actually. So we have five fundamental principles, 5 threats, and 2 safeguards to learn about. The fundamental principles are integrity, objectivity, confidentiality, professional behavior and due care, and professional competence and due care, and professional behavior. The threats are self-interest, self-review, advocacy, and intimidation, self-interest, self-review, advocacy, intimidation, and familiarity threats. These are 5 threats. The safeguard to an accountant will come from the profession. The ACCA or the IFAC has given lots of safeguards for accountants. Similar to that, may come from the work environment as well. The work environment means if you are an accountant, it may come from your organization. If you are an auditor, it may come from your audit firm or the client organization. So we have to have an understanding about what are these principles, threats, and safeguards really. The need for professional ethics. Do we really need ethics? Yes, we need. The users need to trust the professional who is providing the assurance. As an accountant, I'm in an assurance business. As an auditor, I'm in a. My job is reporting somebody's financial information. My job is providing an opinion on somebody's financial statement. That is basically my job. So, how people will trust me? Because I'm providing assurance, how people will trust the assurance, what am I providing? Right? So for them to provide, I had to be a good person, no? Say for example, just take this as an example. In your village, you have two type of people. One type or two individuals. One individual every day get up early morning, go to temple, always act like he's telling the truth. We don't know whether he's telling the truth. We don't know, but always he act like he's telling the truth. Always he wear white dresses, and he's available for people to discuss people's problem, and he has a very decent family life, right? That is one individual. The other individual gets up around 10 o'clock. He always drinks and he always smokes. He doesn't dress properly. He doesn't groom himself properly. So now you're going to select someone as a custodian of your temple monies. Which person you will appoint as a custodian of temple monies? Right? Of course, the individual number one. Because you want to trust, and people normally associate their trust with the appearance, the good conduct of the person. So, similar to that, if you look at the auditors, we are in a business of selling assurance, and people are supposed to trust us. So, for people to trust us, we have to act ethically, or we have to be seen as acting ethically. If we don't seen as acting ethically, people will not trust the assurance what we are providing. In order to be trusted, the assurance provider needs to be independent of their client. Independence can be defined as having freedom from situations and relationships. Objectivity would be perceived to be impaired by a reasonable and informed third party. So if a third party thinks I'm not ethical, I'm not acting in an independent manner or in an ethical manner, then I'm not actually, I won't be trustworthy from their perspective. So for me to be trustworthy, other people should trust me. For other people to trust, I had to not only act ethical, I had to be seen as ethical also. Therefore, the assurance providers should act according to a code of ethics. So when it comes to IFAC, right, International Federation of Accountants, and ACCA codes, these are based on a conceptual framework approach. Now, the conceptual framework means it's a principle-based approach. Right? Not a rule-based approach. If you want to govern someone, you can put rules and govern, or you can put principles and govern. The difference is, when it comes to rules, you have to comply with the rule. If you don't comply, you will be punished. The principle, you tell them the importance of the principle and you make a behavioral change and you manage through that. Right? Now, for example, of COVID-19. You put rules, you shut down, you close down, you make people to wear a mask, and you put your tight regime and you control, and people are going to comply with it until you put the rules. The day you remove the rules, everybody will be very happily back to normal without thinking about the consequences. On the other side, if you educate the people on the principles, this problem is going to stay there for next 4 or 5 years. So you guys are supposed to have a behavioral change in terms of wearing your mask. You got to have a behavioral change in terms of always maintaining a 1 meter distance, bring some hygienic practices, shield the elderly, people who are above 65 and people, the vulnerable people such as pregnant mothers or people with some non-communicable diseases, right? Keep them properly shielded, have apply more hygienic to them. So like that, if you educate the behavioral changes rather than putting a lockdown and closing down, right? The people really change. So one is rule-based approach, the other one is principle-based approach. If you take our country in terms of COVID, we mostly take the rule-based approach for 3 months, and we adhere to the rules. And once the rules were lifted, everybody was back to normal. No behavioral changes was seen, and finally it started. On the other side, the countries like New Zealand or Sweden, they went for the behavioral changes. They started educating people. Look, this is going to be a problem for next 3-4 years. You have to change your practices. You have to change the way you act. You have to change the way you live. And then people started changing, and they are going for a long-term solution. Whereas, as usual, Sri Lanka, we have a much longer term to find the long-term solution. So same thing applies to the accounting as well. You can put rules and you can monitor, or you can put rules and monitor, or you can put principles and monitor ethics. IFAC and ACCA, they have decided to put principles rather than rules. Right? Give a minute, I'll just open the book as well, in case I miss any point. So when it comes to conceptual approach, right? So whenever you are faced with an ethical problem, when it comes to a conceptual approach, these are the 5 questions you are supposed to ask. Question number 1, what are the relevant facts? For example, your boss is asking you to pay a bribe. So what are the relevant facts? My boss is asking me to pay bribe. That's my relevant fact actually, boss and the bribe. And I'm supposed to record it. And I'm supposed to report it to the government if I get to know about a bribe. What are the ethical issues involved? The ethical issues involved are basically, look, there's a duty of confidentiality which I owe to my boss, and on the other side there's a duty I'm supposed to report that to the government. So which fundamental principles are threatened? Right? So if I take the fundamental principles which are threatened is basically the principle of confidentiality, the principle of integrity. If I go and record a bribe, and if I don't report, then I'm not an honest person. So I'm a criminal. So then the principle of integrity, and if I report it, I'm violating the confidentiality I have, the duty of confidentiality which I owe to my employer. Do internal procedures exist that mitigate the threats? Right? So is there an internal policy where a bribe is wrong? If there is there in addition to your boss, you can go and get some help? Is there a place you can you can solve this problem without being reported? Is there a way you can stop your boss paying bribe or receiving bribe? Check that. So what are the alternative causes of action? So sometimes the alternative cause, one action may be you have to resign from your job, or you may have to go and report to the authority. or you have to just shut up and stay there. So what's the action you're going to take, right? So in using this conceptual approach only, you have to explore each and every ethics question. The same conceptual approach is given to you in this diagram as well. Look at this diagram. Identify the ethical issues. Is it a non-compliance with the principle or not? Yes or no? Yes, it's a non-compliance. Then, or no, it's not a non-compliance. Then, okay, no problem. Proceed with caution. No, it's non-compliance with the principle. Then, see whether it's a significant problem or not a significant problem. Yes, it's a significant problem. Then go to the next question. Are there safeguards? No, there are no safeguards. Then refuse to perform the act. By any chance, if it is not a significant problem, or by any chance, if there are safeguards, then you can proceed with caution. Now let's put an example here and we will analyze. Number one, identify the ethical issue. Right? What do you mean by identify the ethical issue? So the ethical issue here is first point I say, okay, let's take an example. A client is offering you a sponsored foreign vacation after the audit. So one day the audit committee called and told you, hey auditor, we know that you are doing a great job, so we want to thank you for that. As a way of thanking you, we are going to offer you a sponsored foreign vacation. Right. So what's the ethical issue here? The client is giving a foreign vacation to me. Change my decisions? It might, because foreign vacation is something big for me. It might change the decisions I take. Then I have to ask my first question, is it non-compliance with the principle? Yes. If I accept a foreign vacation tour from the client, I will become more loyal to my client. Will I ask questions from my client? I will not ask the right questions from my client. Right? I will accept whatever these guys are telling and I will shut my mouth and I will do the audit. I will not apply something called professional skepticism. So of course, it's a non-compliance with the principle, which so it creates a self-interest threat because I'm interested in getting that foreign vacation. That creates a threat to principle of objectivity. Is it significant? If a client is offering me a cup of coffee, it's not significant. Why? I'm not going to change my decisions, or I'm not going to reduce my professional skepticism for a cup of coffee. But if the client is giving me a foreign vacation, for example, client is sponsoring me a vacation in Russia, and he is offering me a train ride from the Siberia to Moscow, that's a big thing for me. Then yes, it can change my decision. Right? Are there any safeguards? Can I accept the foreign vacation and do the audit with applying some safeguards? No. If you accept the foreign vacation, that's it. Then nobody will perceive you as an independent person. So there's no safeguard. Then refuse to perform that. Tell the client, sorry, I can't do this. I can't accept your offer to I can't accept your sponsor to go to country. So let us take one more example. Say, for example, if I take a client is offering a job. I'm the auditor, they are offering me a job. Is it a non-compliance with principles? Yes, that is also a non-compliance with principles. Which principle is getting affected? Which principle is getting affected if I get a job? It's again create some self-interest threat, because if somebody is going to give me a job, I'm very happy about that. So if I'm very happy about that, I will become loyal to that client, that person who is giving me the job. So I will not do my audits properly. Is it significant? Yes, it's a significant. Job offer is significant. Are there any safeguards? So the audit firms have safeguards. There are three types of people who can get jobs. One is the audit junior. Number two, audit senior. Number three, audit manager. If an audit junior is getting the job, right now, audit junior would have only audited very non-important items. Normally, the important work is done by the seniors. Less important work is normally done by the juniors. So if a junior has done, normally the audit firm's practice would be immediately stopping the junior from doing that audit further, let the whole section to be reviewed by someone else, and then tell the audit junior to join the client once the audit is over, right? So if I'm an audit junior, joining a client place is not a big deal. So if I'm an audit junior, I would have done very simple sections such as fixed asset. I would have checked fixed assets or inventory. I would have checked I would have checked something like a depreciation recalculation, and I would have checked that. And there's no big threat. I got a job from a client, so the areas whatever audited by me has to be reviewed by someone. If somebody comes and review my work, and in my work if I have not done something bad, then that's fine. Then that's not a big problem. I can go and join the client. But the job offer has been given to an audit senior. Now, audit senior is a serious person, right? The audit senior is the one who basically handles the whole audit. So the client has given the audit senior a job, and the audit senior is very much interested in taking that job. That is dangerous. That is actually dangerous for the audit. So as an audit firm may have a practice, by any chance if an audit senior accept the job, audit senior, or if he get a job, or audit senior will be immediately removed from the audit. All the work done by the audit senior will be properly checked by one more person. Maybe the audit partner will complain to the audit committee about the client offering or audit senior job when the audit was in progress. The audit senior will be asked to stay away from the audit for at least 3 months, a grace period, and after that the audit senior can join the client place. Because audit senior, if we get together with a client, he can actually do whatever he wants in the audit, right? Let's say the third person. So we discussed about audit juniors, we discussed about audit seniors. Finally, it's about audit managers or the partners. If the audit manager or partner get a job offer from a client, that is dangerous. So when the audit is in progress, if somebody is offering the audit manager or the audit partner a job, that has to be immediately reported to the audit committee, and the audit manager or the partner should not accept this offer. And most of the audit firms, they have this rule called grace period rule. In the grace period rule, you can join an audit firm only after 1 year. from the completion of the audit. So for example, if I audit a company as at 31st March 2020, and if I completed the audit and gave the audit report by 31st May 2020, until 31st May 2021, I can't join the client place for a job. So generally, audit firms have rule like that as well, right? So you see, audit junior joining a client place, is it significant? Not significant, right? But audit senior joining the client place is significant. The audit manager joining the client, that's much more significant when it comes to an audit. So the safeguard, normally the grace period and review by one more person. So say by any chance an audit junior got a job offer, all the work done by the audit junior has to be reviewed by one more person. If the audit manager, if he's getting a job offer, the safeguard is the grace period. I'm giving them a grace period of 1 year, and after 1 year only you can join the client place. So that is basically the safeguard what I'm. If there's no safeguard, or if the problem is very significant, if there's no safeguard, then as a good auditor, I should refuse to perform the act. Right. Let's go to the next section. So just a note to Rehan, like you can stop that, the second video, you can stop there, and this can be the third video. Accountants and auditors, or the members of AC, have to comply with these fundamental principles. The fundamental principles which an accountant or auditor has to comply with are integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. So number one, integrity. What is integrity? Being honest and being straightforward. That's what. If you're an accountant or if you're an auditor, you have to be an honest person. That means you have to be a truthful person. You can't be violating the government rules. You can't be a criminal. You can't be stealing money, right? You have to be an honest person. On the other side, you are expected to be a straightforward person also. Who is a straightforward person? Now, for example, in an annual general meeting, an ACCA member is sitting as a CFO. He did his accounting presentation without any misinformation, right? He did a good account. He actually presented the real situation of the organization to the shareholders. After CFO, the CEO started presenting something which is completely false. So he was giving lots of misrepresentation and false information to the shareholders. Now the ACCA member, who is our CFO, is sitting there. Now he only told the. Now his boss, the CEO, is a different presentation, and he's telling so much of lies. So if I'm an ACCA member, or what the ACCA member should do? Keep silent, or walk out, or like a Bollywood movie hero, go and hit that fellow on the face and take the mic and give a inspirational speech to shareholders. Keep silent. If you kept yourself silent in a situation like that, you are not a straightforward person. You can't think, I am good because I did not lie. My CEO is lying, so it's not a problem for me. You can't lie. You can't basically think like that. Then you are not straightforward. Walk out. That's the thing you are supposed to do. If you think that somebody is cheating, or if you think the company you are working is cheating, or shareholders are cheating, or somebody is getting cheated, as a good auditor, you should not be part of that organization. Or as a good SCA member, you should not be part of that organization. If possible, you can be a third person and go and hit the fellow, or you can go and report to the government authorities, if possible. If not, at least walk out of that place. So honesty means you being truthful, you being a good person. And straightforwardness means when people around you, when they do something bad, you are not accepting it. You are against it. You are raising your voice over it. Or you are just walking out, saying that you don't want to be part of it. That's what you call integrity. So if you want to be a good auditor in the future, the principle number one, which you are supposed to develop among yourself, is being a person with integrity. Always be honest, always be straightforward. Principle number two, objectivity. What do you mean by objectivity? Independence. Actually, it's independence, right? You can listen to many people. You can get advices from many people. You can be friends. You can be a friend to many people. But when it comes to taking your professional judgments, it's only you have to decide. Based on your consciousness, you have to take your professional judgments. You should not be biased towards someone. You should not be biased towards something. If you feel like you are now biased towards someone or biased towards something that someone is going to offer you, then you don't have the independence to be an auditor or an accountant. So objectivity is actually not that much important for an accountant, but when it comes to an auditor, it's very much important. Because as auditors, we sell assurance, we sell independence. So objectivity means be independent. Professional competence. The principle number 3, part 1, professional competence. Auditor and accountant, you have to have the right competency. If you don't have the competency, you should not do a particular job. So for example, if I don't know auditing, I should not teach auditing. If I don't know accounting, I should not be an accountant in a company. I don't know something like blockchain, but I'm acting as a blockchain consultant to the whole company. That is wrong. So always do something where you have your professional competence. That means you are certified to do something. That means you are studied and you have trained yourself to do something. That's what you call professional competence. Due care. What do you mean by due care? Whatever you are doing, don't do in a negligent manner. Do in the right way, right? Be careful. When you are an auditor, without even going to a client place, don't issue audit. Then you are not showing due care. You are negligent. When you have 1,000 transactions in the whole population, at least check 100. You only check few, 2, 3, and you come to a positive conclusion. That's wrong. Don't be negligent in your work when you are an accountant or when you are an SCCA member. Confidential. When you are a client, the client is going to give you so much of confidential information. You get access to their budget, you get access to their formulas, you get access to their documentation, and you may be privy to some information which you can sell in the market and make some money. Say, for example, when you are doing an audit of a listed company, you got to know that company is going to privatize or delist themselves from the share market soon. What shall you do now? Normally, when a company is going to get delisted, the company give a very high share price offer. So, because if I'm a shareholder, I have a share at say $10 per share. If my company want to delist and the company want to buy my share, I won't sell at $10. The company has to give me a good offer. Maybe $20, maybe $30, they have to offer me. So as an auditor, when you are doing the audit, you got to know this company is going to get delisted. So if the company is going to get delisted, they will offer good money to that particular share. But the information is still confidential. It does not leak the public. What you do, you go to the market, under your wife's name, you buy so much of shares of that particular organization and you keep it with you. The day the companies get delisted, you sell the shares to company and you make a thumping profit because you bought at $10 and you sold to company back at $30. You did that because you are privy to that confidential information, which other shareholders were not privy. That's wrong. That is violating the principle of confidentiality. Be confidential to your client. Do not use client information to make money. Professional behavior, the other important thing. That is what I have been stressing always. Like, unfortunately, guys, I mean, you can't say I'm a good person, others don't think I'm a good person, I don't care about it. In your personal life, you may be able to tell like that, but when it comes to your professional life, you can't tell like that. You have to be a good person, and you have to show that you are a good person as well. You can't say I'm deep inside, I'm a person with integrity, but I look like a thug. I'm sorry about it. You can't tell like that. You can't tell I'm auditing my brother's company, but still I'm independent. You may be deep inside you may be still independent. You are a person who will even put your brother into a jail. No, you may be an independent person, but others will not believe it. So show your behavior. You have to show your professional behavior, right? So what do you mean by professional behavior? Act accordingly. Don't appoint your son as your personal assistant when you are holding a public office. Don't appoint your wife. Don't associate with a smuggler. When you go for office meetings or whatever, wear appropriately, right? Don't let the social status down. So those are called professional behavior. If you're an auditor or an accountant, unfortunately, professional behavior is important. If you're a singer, if you're a DJ, you may not have a professional code and you can act in the way you want, no problem. But when it comes to the profession of accounting, profession of auditors, unfortunately or fortunately, the professional behavior matters a lot. So as young chartered certified accountants, you have to develop these principles in your mind. Always be a truthful person, be straightforward, be independent, do only things where you have the competency, make sure you are developing your competency, and show due care to whatever you are doing. Don't be negligent, maintain confidentiality of your client information, and then behave in a professional manner. So I'll just post there, and I will ask you to look at your textbook at this moment, right? I'm using the latest textbook here, so I'm giving that page numbers based on the latest Kaplan textbook. So in your latest Kaplan textbook, page number 49, there is a expanded reading material called Current Issue Exposure Draft on Role and Mindset of Accounting. Proposed revision to the code to promote the role and mindset expected of professional accountants. Right? So the principles, there are some proposals to change them further. Now, I told you objectivity is being impartial, being unbiased, right? So here, that's a current definition. There's no change in the current definition, but there's a proposal to change that in the future. The definition of objectivity is to exercise professional or business judgment without being compromised by bias, conflict of interest, or undue influence, or undue reliance on individuals, organizations, technology, or other factors. So actually what they are doing is they are expanding the definition further, right? Professional behavior, look at this. The definition of professional behavior to be enhanced to include a requirement to behave in a manner that is consistent with the profession's responsibility to act in public interest. So the current definition is members should comply with the relevant laws and regulations and should avoid any conduct that discredits the profession. But in the future, the definition may have a particular section asking you to behave in a manner which is consistent with the profession's responsibility to act in public interest. So it doesn't change that much, but you have to understand that you are supposed to act in public interest, because accountants, we act in public interest, isn't it? So we have to make sure that that people who are looking at us think that we are acting in public interest. Integrity they are changing a little bit, having the determination to act appropriately when confronting dilemmas or difficult situations. So actually what is happening is this, all these principles and all, they are a little bit modifying the definitions, which they are modifying to adapt to the new world. Now, new world is different now, like these principles were developed maybe around 20-25 years ago. But if you take today's world, we are more connected online, we are more transparent. The societies are much more transparent rather than the 20-25 years old society. And a lot of decisions are not taken by us, are taken by systems. So how are you going to manage independence? How are you going to manage integrity? We need better definition. So that's what the proposal is basically. Okay. Right. So a note to Rehan, you can stop the video from there, and this can be the fourth video today. The fourth video is going to be about threats to fundamental principles. All right. Now, in the previous video, we looked at what you call the principles, the fundamental principles: integrity, objectivity, confidentiality, professional behavior, and due care. And in this video, we are going to look at 5 threats which may make us not to comply with those fundamental principles. So principle number 1, self-interest threat. Sorry, the threat number 1 is self-interest threat. What is meant by self-interest threat? Say I'm an auditor. When my objective or my interest is actually giving an opinion on the financial statements, I may not say there may be something else coming in my way which is conflicting with my interest to give an opinion on the financial statement. So I'm doing an audit to give a true and fair view, and there are some frauds or whatever happened, then I had to report it. Then only I can fulfill my I can fulfill my objective of giving true and fair view. But unfortunately, the client don't want me to report it. The client is giving me some bribe or sponsored vacation or whatever, and I'm kind of interested in taking that up. That creates self-interest threat. If I have shareholding in the client, if I have the a job opportunity available with the client, if my wife or brother or sister works in that company, if the client offers me some money for doing something, then automatically, or if I heavily depend on that client, right? Now, for example, my whole total revenue, 100 million, 90 million is coming from one particular client. So I'm heavily dependent on that client. In such case, I have a self-interest threat. It impairs my independence. I'm trying to protect I may try to protect my self-interest rather than getting a proper audit done. So that's what you call self-interest threat. Number 2, self-review threat. The self-review threat is where I am reviewing my own work. So, for example, a client has asked me to do the audit. So I was doing the audit. One day they called and asked me, "Hey, auditor, our internal controls are not so strong, especially our financial internal controls are not so strong. Can you help us to improve by putting some controls?" I said yes, and I improved them by putting some controls. And on the third session, I came back to audit the same controls as an auditor. So I'm the one who put those financial controls. Now I'm the one doing the audit of those financial controls. not a good practice, which is not a right practice. I should not review my own work. I can't be an accountant plus an auditor for a company. I can't take management decisions and then audit those management decisions. So for a small business, can I prepare financial statements for them? Yes, provided they take the responsibility for the financial statement and they do not, and you do not take any decisions. All the decisions are taken by them and they take the responsibility for the whole financial statement, but you prepare the financial statements for them, which is okay. Which is fine only for small companies, right? By any chance, you are taking the decisions and you are auditing, preparing the financial statements, and then you are auditing them also. Then actually, that's not right. You have a self-review threat arising there. All right. So self-review threat arises as auditor. You are reviewing your own work. Familiarity threat. Remember, many students make this mistake. The people think familiarity threat is something linked to family members working in that company. No. If your family members are working in that company, that's what you call self-interest threat. That's not familiarity threat. Familiarity threat means you are familiar with something. As a result, you can't pick up the problems. Say, for example, you have been visiting a restaurant for 10 years, right? You just go and eat from there. You don't question anything, no? You just go and eat from there. You don't bother too much to check what they are serving, their quality levels, who is the cook. You don't check anything. You just go and eat from there, right? But if you go to a new restaurant for the first time, you will check everything. Who is the cook? What's the menu? Is this place is hygienic or not hygienic? What my friends who visit this place have posted about it. So if I'm familiar with a particular situation, my ability of asking questions reduces. If I'm in a new environment, I ask more questions. So if I act as an auditor for a company for more than 5 years, automatically everybody in the company are my friends. My ability of asking questions from them reduces. If I'm auditing a company for the first year, I'll be asking so much of questions. That's why generally when it comes to listed companies, auditors are allowed to be an auditor only for 5 years or maximum of 7 years. Advocacy threat. What is advocacy threat? You promoting your client. Sometimes your client might say, hey, help me to promote something, I will pay your money. There was an old ACCA question. There was a client, the client is a software developer, and he had an auditor. So one day the client offered a proposal to a client. Client offered a proposal to the auditor. He asked the auditor, hey, you are good in accounting, I'm good in software development. Can we combine and develop some accounting software which you can go and sell to your other clients? So let's say if the auditor accepts that, there are two problems. Problem number one, advocacy. The auditor and the client has developed a software, and the auditor is selling that software to other clients. That means he is promoting this client. That is advocacy threat. More than that, in that example, there's a self-review threat also, because the software was developed by you, and then you are doing the audit of the same software. Right? So there's a self-review threat as well, but that example for advocacy. And the example, a client is asking from you, hey auditor, can you come and sign my bank guarantee? Can you, because I don't have anyone, I'm getting a loan from a bank, I need a guarantor. You are my best friend, so you come and, or you are the only known friend I have in this town, so can you please sign the guarantee for me? Now if you sign, you are promoting the client to the bank. Advocacy threat. As an auditor, you should not promote client to other people. So there's one question like, can you refer people to others? Right? You can't promote, but you can refer. Say, for example, it's like this. Now, you are running a restaurant. I am an auditor of your restaurant. I am putting on my Instagram, I am promoting you on my Instagram saying that, hey guys, go to this restaurant. This restaurant is the best restaurant in the whole world. Try food out there. I'm promoting. That is wrong. That is not an accepted practice. That creates advocacy threat. Somebody asked from me, hey Pras, you know anyone who basically any good place to eat? I said, yeah, one of my clients runs a restaurant at that location. Just go and eat from there. I tell like that. That is referring. Referring somebody is accepted, but promoting is not accepted. For reference, charging a fee also accepted. Right? Now, for example, a client is looking for a client want to construct a building, looking for a construction company. And I happen to know a good construction company. They're also my client. So I introduced both parties, and the construction company got a business, and the construction company then said, great, thank you for offering me this client. I'll pay you a small amount as a reference fee. Accepted. Right? Because you're only connecting, you're not promoting, you're just you are referring people to each other, and for that you're getting a fee. That is acceptable provided both parties know that you are collecting fee. Right? The other party, basically the company which is going to construct the building, also should know that you are getting a fee from the third party. Not the third party, the construction company. If yes, the reference fee is accepted. Otherwise, no. The last threat, the intimidation threat. That means somebody is making you afraid. Somebody is telling you, hey, if you give a bad opinion, I'll kill you. Intimidation threat. Somebody is telling you, if you give a bad opinion, if you give a qualified opinion, I will make sure that you are not the auditor next time. Or someone is telling you, if you report this, I'll file a case against you. All this creates intimidation. If there's an intimidation, it may sometimes affect your independence. You are afraid to do the audits. Right? So intimidation threat also has to be stopped. The best way of, if an accountant or in a listed company, if an accountant or a managing director is putting some intimidation, the best way of handling that intimidation is going and reporting that to whom? The audit committee. The audit committee is there. Reporting that to the audit committee is the best way. Right? So these are the 5 threats. So in your exam questions, they normally give you a 25-mark question, and you will be expected to identify the principles getting affected and by which threats those principles are getting affected. So this is an important section, and now I'm looking at your book, which is the threats are appearing on page number 52. The examples of threats and all are given there. There's nothing much I have to add to that threats. Later when we go through the examples, we'll go through in detail. So let's move to the next video. And we are going to start the next video here. Let's see, I got a question. Yeah. Safeguards. So in the previous videos, we discussed about the principles which are affecting the principles what we are supposed to comply with, and the threats what are affecting those principles. Now we are going to look at the safeguards. The safeguard means the facilities available to us to counter those threats. Right? Now, if we face a self-review threat, or if we face a self-interest threat, there should be a way to counter them. And there should be a way to reduce the impact of those safeguards. If we can reduce the impact of the safeguard, yes, then we can continue the audit as it is. By any chance, if we can't reduce the impact of that particular threat, right, not the safeguard, the particular threat, then either we should stop doing the audit or we should eliminate the threat. Now, for example, a client is telling me to, or client is sponsoring me a foreign vacation. So that threat is, so this, say for example, a client is asking me to, what do you call, a client is asking me to, or client is sponsoring my foreign vacation. Client, if the client sponsor my foreign vacation, that's a threat for me, right? And because of that foreign vacation, sometimes I'll be biased toward taking some decisions towards that client. So it's a threat. The safeguard is, there's no safeguard. So you have to anyhow decline accepting that vacation. The client is giving you some other gifts, such as a calendar or some immaterial gifts. The profession has a safeguard for that. Normally in UK, what they practice is, for the whole year you can get some gift from a client is restricted to £50. The maximum gift you can get from a client is £50. So safeguards created by the profession is that. So if the client is giving me a safeguard worth of £50, sorry, the client is giving me a gift worth of £50, I'm going to accept it because that's my safeguard. That my safeguard allows that. If the gift is more than £50, then I can't accept it. So these safeguards are created by the profession, that is the accounting profession, that is the ACCA, IE, IFAC, they create some safeguards. And plus the safeguards are created by the, what do you call, the work environment, right? So examples of safeguard created by the profession. Now, for example, if you take Sri Lanka as an example, here if you want to be an auditor, you have to be a qualified chartered certified accountant. If you are not a qualified chartered certified accountant, sorry, if you are not a qualified chartered accountant or if you are not a registered auditor, you can't be an auditor. Audit, there's a minimum entry qualification is there. If you don't have that minimum qualification, you can't be an auditor. So that's a safeguard. Just imagine that safeguard is not there in the profession. Anyone can become an auditor. A person who just passed out advanced level accounting course also can become an auditor. And a person, so such a person who has not gone through a professional education, becoming an auditor, he may not abide by any code of ethics, and he may do whatever client is telling, and as a result, the whole auditing profession will lose its reputation. So that's why there's a rule or a safeguard saying, if you want to be an auditor, you have to be a qualified chartered accountant. So similar, one more safeguard which is given by the profession to you is your rights. As an auditor, the rights what you have. Say if you're an auditor, you have a right to ask for any information you want and the client has to provide it, right? So the client can't stop you because you are authorized by the statute to ask for any information you want. You have a right to meet anyone in the company you want in relation to the audit. You have a right to attend the annual general meeting. You have a right to speak in the annual general meeting. All these rights are given as safeguards to you to protect your independence. So when you can ask any information, when you can go to AGM and speak, then nobody will tamper with your independence. So these are the examples of few safeguards created by the profession of the profession, or safeguards created by the legislation of the country, or by regulations. In addition to that, there are safeguards coming from a work environment for the auditor also. The auditors have two work environments, the audit firm and the client place. So if I'm an auditor at PwC, PwC is my workplace. There are some safeguards for me. On the other side, my client place, if I'm doing the audit of, say, Amazon, the Amazon is my client place. So if I look at PwC, I have some safeguards. What are the safeguards I have there? If I'm a junior, I'm not sent alone to an audit. Normally, I work under a senior. If I have a technical problem, I have a technical partner from whom I can get some information. I can get some help. I can ask information from. If I have an ethical problem, the audit firm would have rolled out some ethical framework, so I can follow that. If a client is putting me an intimidation, I can always come back and get some cloud or get some cover from my audit partner. So these are the safeguards which is available for me in my work environment number one, which is my audit. When I go to a client place also, the client can't intimidate me or threaten me at Amazon, because Amazon's board audit committee protects me. So I have a direct reporting line to board audit committee. Board audit committee makes sure that I am independent, as well as the client is not tampering with me. The board, if I have a problem, I can always go and report that to the board audit committee. And the board audit committee have a private session with me to understand whether management has put some pressure on me or not. So these are the few safeguards which is available for me from the client place. So safeguards in the work environment come from, one is the audit firm where the auditor is working. The other one is from the client place where the auditor is going and doing the audit, especially from the audit committee. These are two safeguards. So Rehan, we can stop the video number 5 with that, and then we are going to do the video number 6. Just ask from people in the class, I think only one, right? You guys have any doubts so far? Anything to clarify? There were 2. Shobana, Fatun.
No, sir.
Okay. Fatun, you have any doubt? Is it Nisha or someone? Who said no now? Shobana, you said no, right?
Yes, sir.
Yes, sir. Okay. Right. Just I'm explaining you, like, what I'm trying to do is, like, Raj will be sharing you the videos. Today he should have shared by now. But what I'm going to do is I'm going to segment it by section by section and save it in the folder. So sometimes watching a 3-4 hour video continuously may be difficult for you, but small videos. One is covering what is independent, what is principles. One is covering what are the threats. Another one is covering what are the safeguards. Another one about examples. Like that, if you can short 10 to 15 minutes, but multiple videos, I think that will be more helpful when you guys are studying, rather than having a one big lengthy video. So I will cut all these videos into pieces, and I will upload them separately. So in that case, I hope it will be convenient for you guys to study. Last week I was quite busy because of this COVID issues and all those stuff came. Had to get involved. Like, we had to prepare the organization to meet the new right. So we had to because I work as a compliance plus risk and audit person. So I had to get involved with the PHIs and change certain practices. change certain, have to keep the proper documentation I had to do. So I could not answer the questions or queries then and there. But if you have any questions or doubt, please post on the WhatsApp. Hereafter, I will make sure that those are getting answered on time. Right, so let's go to video number 6 now. Now, in this video, we are going to look at the threats and safeguards. So we are going to have a very practical session now, going through few examples of threats and safeguards, right? So in your exam, normally they give you a 25-mark question. I'll just show you. What I have done is like, I have created a workbook for you guys to do as homework. So if you go to the module, you have the ethics practice book is there. So there are a few questions I have included. Can you see the question number 1? So they give you normally a big question like this. This question may have multiple problems inside. Like earlier question we discussed, we had 3 problems. So this question, it's a 13-mark question, maybe around 4 or 5 problems maybe inside. So we have to identify these 5 problems, and what we are supposed to do is we have to apply this framework and draft the answer. So now we discussed about the framework. So now we are going to see the practical application of framework for each and every item, right? So later we will do the questions and see how, when a question have all the problems together, how are we going to face it. Threats as auditor you might face and what you are supposed to do about it. Threat number 1, fee dependency. Depending on one client for fee, this create intimidation threat. So what is meant by that? You are completely depending on a particular client for your audit fee. Of your total 100 audit fee, audit revenue you get per year, say 70-80 million coming from one client. So that person is no longer a client for you. He is your goat now. Whatever he say, you will do. Because by any chance, if he withdraw the audit from your audit firm, your audit firm will go bankrupt. That is not a good practice. So when it comes to this kind of threats, you should know what kind of threat is getting created and what kind of which principles are getting affected. There can be multiple threats and multiple principles getting affected. In this situation, the threat is the intimidation threat, as well as to a greater extent you can say there is a self-interest threat also. The principle which is going to get affected is objectivity. Actually, most of the cases, objectivity is a principle which is getting affected. Safeguards. There are 2 types of safeguards. One safeguard is basically for the listed companies. The other safeguard is for non-listed companies. So for the listed companies, we normally have very strong safeguards. For non-listed companies, we have very relaxed safeguards. Safeguard number 1, fee dependency. For the listed companies, the rule is this. If you are an auditor of a listed company, the maximum audit fee you can charge from your audit client is only 15% of your revenue for 2 consecutive years, right? So you can charge, for example, my total audit firm's revenue is around 100 million. From one client, how much I can get is 15 million rupees only. I can't charge more than that. By any chance, if it exceeds in 1 year, that's okay, but it can't be exceeding in 2 consecutive years. In that case, that is not okay. Understood? So maximum fee and audit firm, maximum fee which I can get is basically 15% of the total fees, right? And I should not exceed by 1 year. If I exceed, it's not a big problem, but 2 consecutive years, I should not exceed. When it comes to a non-listed client, the rule is not that much stringent. There's actually no rule. The principle is there. The principle is you should take your own steps to make sure that you are not depending on 1 or 2 clients for your audit fee. If you are depending on 1 or 2 audit firm or one or 2 clients for your audit fee, it's not, so audit is not going to be very successful. Number 2, gifts and hospitality. If people are giving you gifts and people are giving you over hospitality, for example, once when I was an auditor, there was a client. I mean, you know, in Colombo, we don't pay the audit juniors that much. We pay them only like 5,000, 6,000 rupees. At that time, I was practicing as an audit junior. What do you call the fee which I used to the allowance which I used to get is only 1,500 rupees. So this auditor, right? So this client, I mean, we were allocated for a particular client audit, and this client basically what he did was he gave the best hospitality I have ever experienced as an auditor. So I had only 1,500 rupees on allowance, and for the audits and all, I used to travel by the government buses, the public bus. For me, when I was allocated for this audit, my senior told, "Don't worry, client will send you a vehicle." So around 7:30, I went out, and there was a vehicle waiting for me, which is actually a what do you call this? Defender, Land Rover, right? I got shocked, like, come on, a Land Rover coming and picking up. And the whole apartment, we had some girls, and also in front of them, I'm early morning getting up and going in a Land Rover. A driver with a Land Rover coming and picking me up was a big boost. Then when we went to the client place, the first thing to ask is, did you have your breakfast? Otherwise, we'll share our breakfast. We will provide you breakfast. And so it's a normal practice for us to have breakfast from there. Generally, clients do not give you breakfast unless it's a factory. Then you are normally provided with the factory. You can go and eat with the factory workers. But normally, you don't get what do you call the breakfast. But this client was offering breakfast. And we had an unlimited supply of biscuits and tea. And lunchtime, the client asked us, or client normally take us out for a lunch. We were auditing in a place called Biagama. So close to that place, only one good restaurant was there. So we always go to that good restaurant, and we have varieties of dishes tested from there. In the night, by any chance, if we, always we get a transport back to home in the same Defender, same Land Rover. In the night, by any chance, if you are getting late, no problem. Client again gives us the best dinner ever we have tasted, right? So in that client place only, I basically learned this fried rice to all these different food items. I really experienced from that client place. So all this happened because the particular client wanted to hide a particular fraud. The client, what he has done is, he has, that time that particular garment factory was running, it's a cap manufacturing organization. So the cap manufacturing organization was having some problem. So some of the orders did not work out very well. So what they have done is they have put all the, they have put some damaged raw material, bad fabric and all into the warehouse, and they have burned the whole warehouse. To the insurance company and for the book of accounts, they have shown as they have the good material got burned by an accident, and they claimed the fee from the insurance company, and in the accounts also they wanted us to write off the good fabric. When my senior, when he was doing the stock on, he identified some of the good fabric which was supposed to be burned is actually there in the factory floor. Then when he did some investigation, he actually identified these people have actually burned the warehouse, and they are claiming for the insurance, and they are writing it off from the books of accounts. So we had a discussion with an accountant. The accountant told, don't worry too much about it. No need to make a big fuss about it. But we told, no. Anyhow, we have to report to the audit partner. So we had to discuss with him. The accountant asked us not to discuss with the audit partner, but anyhow, we went to discuss. From that day onwards, we were not given with any of the hospitality. No defenders came to pick us. No lunch, no defenders dropping us back, nothing, right? Because the client wanted us to be nice to them, right? That's why they gave an extraordinary hospitality. So if people are giving you extraordinary hospitality, it is because of the self-interest, or it may be because of the it can create self-interest, right? Because I like the hospitality, and I will buy in, and I will not report these things to in my audit report. Or it can create familiarity threat. When people are giving me gifts and good hospitality, they become my good friends. So then I don't question them. Familiarity threat as well. So when it comes to gifts and hospitality, if it is trivial, such as I told you earlier, like cup of coffee or something, offered in the normal business circumstances, it's acceptable. If a gift is accepted, we should disclose. Normally we have to disclose it, right? If it is a bigger gift which can actually change your decision, then it's not an accepted practice. Financial interest. So that means as an auditor or shareholder, as an auditor, I have some shares in the company, or I have given a loan to the company. Then I have a financial interest. Auditor who have shares in the company or auditor who have a financial interest should be removed from the audit team. He should not be kept in the audit team. Either he should dispose his financial interest before the audit, or he has to be disposed from the audit team. Loans and guarantees. Again, if you are giving loans and guarantees, what's the threat arising? Advocacy threat arising. Objectivity is getting affected. If loans and guarantees are normal business, it is accepted. Now, for example, you are doing the audit of, say you are doing the audit of HSBC, and you have obtained a loan from HSBC, and you have a credit card from HSBC. Is it wrong? That is okay. But since you are an auditor, HSBC has given you an interest-free loan, or they have given you an unlimited credit card, then that is not accepted. And the auditor has to make sure the loan or guarantee will not influence his work. Business relationship. That means in addition to the audit, we have a business relationship. So for example, as I told you in one of the previous videos, a client has asked an auditor, hey auditor, I develop softwares, you develop, you know the accounting, can we develop some accounting softwares? Once you say yes, and when you start developing accounting software with the client, you are no longer his auditor, you are his business partner. If you are a business partner, you can't be an auditor. Auditors who have business relationship with the company should be removed from the audit because it affects objectivity. If we have the business relationship, what is the threat we are facing? The threat we are facing is self-interest. Few more examples. Potential employment with a client, which of course creates self-interest. Because a client is doing a job, I'm going to be an employee of the client in the future. He's going to pay my salary in the future. I have to be loyal to him. That creates self-interest threat. It again affects my objectivity. So the safeguards, if somebody offers you a job in a client place, number one, inform your partner saying that you've got this job, right? Whether you are interested or not interested doesn't matter. If you get a job offer, always go and inform your audit partner. If you are working with the client, remove yourself from the audit. Don't be part of the audit team and remove yourself from the audit. And all the work done by you up to now need to be reviewed by a superior. So immediately, all the work done by you have to be reviewed by one more person. For senior staff, such as audit seniors or the managers or the partners, normally there are grace periods. 1 year, 12 months or 3 months or 6 months, based on how senior you are. I can remember in some other jurisdiction, if you are an audit partner and if you want to join a company, there are like a 2-year grace period. The other threat what we may face is the overdue fee. A client has not paid us the fee yet. For the last 2-3 years, he has not paid us a fee. So now he is no longer a client. He is my debtor. I am no longer his auditor. He is my I'm his creditor now. So if there is an overdue fee, as an auditor, what am I interested in? Not getting the audit done properly, but more, I'm very much interested in collecting my overdue fee. Right? I want to take that fee. So if I want to take that audit fee, right, I want to collect that audit fee. While I'm in the process of collecting my audit fee and doing, let's say, one of the client has not paid me 3 years audit fee, so I'm worried about my audit fee, and I'm doing the 4th year audit. When I'm doing the audit, I got to know this client is going to be bankrupt within 6 months or something. So by any chance, if the client becomes bankrupt, I know I will not get my audit fee. Therefore, what I did was I put some extra pressure on the client and collected my audit fee first. Right? So in a normal course of business, I would not have got that. I would not have understood that company is going to be bankrupt. I would not have put an extra pressure to collect the fee. In a normal course of business, I would have been like some other creditors. But in this case, because I am the auditor, I got to know this company is going to be bankrupt and I collected the overdue fee first. And when the company really went bankrupt, I was not affected, but all the other creditors are affected. That is one way of looking at it. The other way is, if there's an overdue fee, the people can intimidate us also, no? The client can say, hey auditor, by any chance if you give a wrong opinion or if you expose something, I'm not going to pay you a balance fee. So in that manner, I can get some threats from the client. So overdue fee creates intimidation threat. Overdue fee creates self-interest. So normally, do not perform the audit work, request client to pay the fee, complete the audit. These are the steps. Contingent fee. What is a contingent fee? Contingent fee is, normally lawyers do contingent fee a lot. Say if there's a court case, say for example, a hospital has given you a wrong medication, but you suffered and you came out of it. Now you want to file a case against the hospital. Lawyers will come and tell you, hey, we will fight with you. If we win the case, you have to pay me 50% of whatever money you are winning. Right? That is contingent fee. Lawyers, I don't know about the lawyers' code of ethics, they may be able to do it. But when it comes to auditors, that is not an accepted practice. You can't have contingent fee arrangements. For example, you can't decide your audit fee based on a client's profit. You can't decide the audit fee based on a future outcome. For example of a future outcome may be, if a merger works properly, I'll get this much of audit. If my share price particular amount, I'll get this much of audit. So you can't have audit fee based on future outcomes. Your audit fee has to be based on what? The effort you put and the risk what you take. So based on that, you can charge a flat fee or a hourly based fee that you can charge, not a problem. But not based on the profit of the company, not based on the revenue of the company or share price of the company or results of some outcomes. So for example, a client is telling you, hey auditor, I will pay you 1 million rupees for each fraud you detect, right? But if you don't detect any fraud, I'm not going to pay you anything. Can you accept it as a audit fee proposal? Because as an auditor, I have access to all the documents. And if I can't find a fraud, what can I do? I can create a fraud. Creating a fraud is super easy. I can remove some invoices and I can say lost invoices are not there. I can destroy some bank statements, or I can modify the system records, and I can say there's a fraud. As auditor, I have access to most of these items. So that's why there should be no audit fee based on the client. There should be no audit fee based on the fraud or the fraud detection or fraud prevention. There should not be any audit fee based on future outcomes. Compensation for selling non-assurance services. Audit partner being given a bonus for selling internal audit service to client. That's an example. So you see, audit firms provide multiple services, as you guys know. Let's quickly go to an audit firm and see what type of service they offer. Let's go to Deloitte. So let's go to Deloitte and have what's happening. Okay, EY. Okay, now you are looking at EY website. Okay, so if you look at EY, they provide many services. What we do. Here it is. So they provide they provide tax services, strategy and transformation services for some private for small private businesses. They help them to become corporates. They provide consulting. They provide assurance. Right. So these are the few services. What do they offer? So let's take assurance. That's actually the audit. In assurance business only, they provide the audit, right? So normally for companies, normally for audit firms, audit is a bread and butter. So audit firms enter into an organization by selling audit. EY, for example, let's take a company like Amazon. So EY, PwC, KPMG, Deloitte, all of them want to be the auditor of Amazon, right? So what they do is all of them quote, and when they are quoting, they know that if you quote cheap only, you'll get that service. You'll get that you'll get that audit. So you charge a small amount as audit fee in order to enter into the company. Once you enter into the Amazon,
Now what you do is you start promoting the tax service or strategy or consulting or some or one of these you start promoting. His bonus will be based on number of other assignments he is bringing from Amazon, right? Now that fellow has lost all his interest in doing the audit and he is more interested in what? Selling the other services. He go and meet the client CFO and say, hey, I can provide you tax service, EY can provide you tax service. He goes and say, hey, EY can provide you consulting. He meet the what do you call the strategy team and say he can provide you some strategy services. He is no longer interested in being the auditor of EY. He's more interested in selling the other services. As a result, he has self-interest. It creates objectivity. So when he's doing the audit, CFO is asking, hey, auditor, I'll give you tax assignment, but can you not report this fraud, this misappropriation out? Yes, I will not do that. Because if I get the tax assignment only, I will get a bonus. So the auditors will be very much interested in selling the other services rather than getting a proper audit done. So that's why if you go to the website, sorry, the slides again, you can see here. The compensation for selling non-assurance services, audit partner being given with a bonus of selling internal audit or any other service to a client, which creates self-interest threat. So the safeguard is the selling of your service has to be done by marketing staff and audit staff has to be segregated. So auditor should not go and sell the service. Auditor should audit, but if you want to sell your service to the same client, no problem. You can select marketing staff. You don't give bonus to your audit partner to bring other services. So, I'm the audit partner handling audit of Amazon. I should be given a bonus if I complete the audit properly, not if I bring other services, other assignments from Amazon. But if you are the marketing director of Amazon, audit firm, let's say EY, you can get bonus for bringing other service for other services from Amazon. You can get a bonus for that. So the marketing team and the audit team has to be segregated. Litigation. A client is telling, by any chance, if you give me a bad opinion or if you do something bad, I'm going to file a case against you. Obviously, that creates threat of intimidation, which have an impact on the threat or principle of objectivity. If somebody is telling you that they are going to file a case, don't panic. First of all, ask why are you filing, and check whether it because you have done wrong or is it because of somebody has misunderstood. If you have done something wrong, please rectify that. But if you think that is because of some misunderstanding, try to explain them. If they don't understand, you also start taking some legal advice and start to. Association of senior personnel. Audit partners doing an audit, for example, audit partner doing the audit for more than 10 years, not accept, right? So if I'm doing the audit for multiple years, I'm so familiar with the whole process. I'm not going to be that much responsible in my audits. So I had to come out of it. That creates a familiarity threat. So the safeguards for listed clients are key audit partners should rotate once in 7 years. So maximum you can be an auditor for a client only for 7 years. When it comes to non-listed or small companies, you are doing the audit of a small company. There's no 7-year rule there, but you have to rotate your senior person. Family and personal relationship. So, for example, your wife or husband is working in that company. This creates familiarity threat because you know about the person, plus it creates self-interest threat. You want to protect the other person. For example, if you find that your husband has done a fraud, and if you are the auditor, you may try to cover it up. So best thing,
remove the person who has a family relationship from the audit team. Any work done by him need to be thoroughly reviewed. Number 13, recruitment services, auditor finding candidates for CFO. You can run a recruitment service, no problem, and you can find security guards and marketing people. But you can't find people who basically, people in the finance department. Because as auditor, you are auditing what? You are auditing the finance department. If the finance department is someone who has been appointed by you, because you selected the person, and when you are doing the audit, if you come across some mistake done by the person, now you will not report to the board. Why? The board might turn back and ask, hey, you are the one who found this person. He has done a mistake. So you are also responsible. So you can, as an audit firm, you can run a consultancy service, you can run a job bank, no problem in that. But don't go and help your company, help your clients to find their finance department. Help your companies to find someone else. Help your companies to find an internal auditor. Help your company to find a security guard or a CEO, even not CEO, but help your company to find a marketing manager, not a problem, but not people in finance department. So should not perform recruitment services for any position which can influence the financial statements. Accounting and bookkeeping services, obviously if you are the accountant plus the auditor, it creates self-review threat, right? So if you when it comes to a listed company, no, you can't be an auditor and bookkeeper. That's wrong. You can only be an auditor or you can only be a bookkeeper. You can't offer bookkeeping service and go and do the audit of that company also. That is not an accepted practice. If it is a small company, now when you say a small company, for example, just imagine a small grocery or a small supermarket. They may not have enough money, enough resources to have a separate accountant and get an audit also done by a separate person. In such a small company, always you can say, hey guys, you take decisions, you take the responsibility for the financial statements, but what I will do is I will prepare it for you based on your instructions and give you, and I will audit the same. For small organization, it can be done. For bigger organization, it should not be done. Different teams in the audit firm can provide both services. Auditor should not take any decisions on behalf of the company. Yeah. Other important point is Chinese walls. If you are providing two separate services, make sure audit team is not giving that service and other team is not participating in the audit. So among your audit firm, among your audit teams, build up something called a Chinese wall, where you don't share your client information, your audit information with other team. For example, if you are doing for a small client, very tiny client, you can do the what do you call this, internal audit plus external. Two different teams have to do, right? Same team can't do both, but two different teams doing it is perfectly all right. For a small company also, two different teams, one team preparing the records, the other team going and doing the audit is fine, but both teams have to be appropriately segregated from each other. The internal audit service, that's what we discussed. If you are an internal auditor plus an external auditor, again we are facing the same problem. As an internal auditor, say for example, I am acting as your internal auditor and external auditor. As an internal auditor, I am reporting to whom? To you, the management. As an external auditor, I am reporting to whom? To the shareholders. So when I am doing the audits as an internal auditor, I did not find some problems. So I did not report to you, so you thought the problems are not there. When I came back as an external auditor and started doing the audit, I found those problems. But this time, since I found it as an external auditor, those problems are supposed to reach the shareholder. Now you are furious. Now you will ask question from me, hey, as an internal auditor, you did not find it out.
as an external auditor, you found it. You are playing a game with me. You will think like that. So that's not a good practice. So as a good auditor, what should I do is, I should not accept internal audit and external audits. If by any chance, if somebody asks me to do an internal audit, okay to do in non-financial areas, not in financial areas, but in non-financial areas, it is okay to do an internal audit. So internal audit services can be provided with safeguards if the audit is on non-financial area. External auditor cannot do internal audit on financial area. And the other point you guys have to remember is it has two separate teams doing this, internal audit and external audit. Taxation services. So when it comes to tax service, there are two types. One is what you call preparing tax tax computations. That's called taxation service. The other one is providing tax advice, telling the client how to pay your tax, where to pay your tax. Those are called tax advisors. So when it comes to taxation service, you can provide taxation service. That means computation of your tax numbers only to a non-listed client. And if it is prepared also, it has to be reviewed by a superior. When it comes to your listed clients, you can't provide tax calculation. You can't do tax calculations for them, because once you do the tax calculation, later as an auditor, you have to go and audit that also. That creates self-review threat. Tax advice, telling the clients how to hide the profit or how to hide the revenue. No, you are not supposed to do it. As an auditor, you have a responsibility towards one of your stakeholders, which is government. So you can't tell the company or advise the company how to cheat the government, how to cheat one of the stakeholders. So as an auditor, you have to refrain from providing tax advisors to the client. But if you look at Colombo, here we audit firms provide both together for even listed companies, which is not a good practice. The other one is valuation service. So what is actually a valuation service? So for example, a client has a land and that land needs to be valued. As an auditor, can you provide valuation services? No, you can't. Because if you value something, that whatever item you valued will come and sit on the balance sheet. So you have to audit your own work. It creates a review threat. No, as an auditor, you should not provide valuation services. For listed clients, for non-listed clients also same thing. But if it is something immaterial, you can do a valuation for them. Otherwise, say for example, one more example is like actuary. Every company has some pension schemes, right? The gratuity provision. In Colombo, we have gratuity provision for people. So if you work in a company for 5 years, after 5th year, after 50 onwards, you are entitled for a gratuity payment, which is half of your salary into number of years you have worked. So if a client is giving you a gratuity payment, that is perfectly all right. I mean, that's fine. But the value, I mean, how much you make as provision? Because even though from the day the employees start working, we start making gratuity provision, all the employees are not going to complete 5 years. They are entitled for gratuity only after 5 years. So there should be a valuation done on how many employees will be entitled for the gratuity provision. Somebody has to do a valuation. Normally that's done through an actuarial valuer. So auditor should not get involved in that. By any chance, if it is a very small company, 1 or 2 people only working in that company, they are entitled for gratuity. In such case, you can perform, provided it's a small company and not a listed company. Promoting a client, if you try to promote a client, you get what? Advocacy threat. Right? Sorry, that's right. There. get advocacy threat. No, if you are an auditor, you should never ever promote your clients, right? It's prohibited. It's not right. You can't be a promoter of a client and be the auditor of the client. So these are a few more, same thing which we have discussed. In a nutshell, beneficial interest in shares and investment, not accepted. You have to dispose your interest before you be the auditor. Loan guarantee from the client, not accepted. Personal relationships and all, no, you have to either divorce your wife or you have to not do the audit of the company. Business relationship with the client, not accepted. Employment with the client, we learn the protocol which we are supposed to follow. Longer association of senior personnel. How many years we can be an auditor? Maximum for 7 years. Over dependence on the audit fee. What is the maximum audit fee I can charge from a particular client? It's only 15% of my total audit. And we have accepted provision for non-audit services we went through. So hospitality, litigation also we went through. This is the last slide. And that also we have to understand along with that. Maybe you can put this as a separate video, just 1 or 2 minutes. So information from, if you collect information, collect information from a client, you should not use it for personal benefit, right? If you want to use for any personal benefit, you get the permission from the client unless there is a legal duty or duty to disclose or there is a public interest, right? For example, say when I'm doing the audit, I got to know a client formula, right? I want to publish it. You can't. If you want to publish it, you get the client's permission, which he's not going to give, so you can't publish. But if you want to be an auditor, and if you want to, when you're an auditor and when you found a fraud done by a client, a fraud against the humanity, a fraud where something like in the mineral water bottles they are putting some heroin, you identify that. So it's a confidential information. You got to know. Should you report? Yes, you have a right to report because there's a legal duty to disclose it. There's a public to do so. The confidential information from a client can be reported only if there's a legal duty or a public duty or a professional duty to disclose so. Otherwise, you can't disclose any information without obtaining permission from the client. Right. So that basically concludes our discussion on ethics. So in your book, whatever I have explained to you there is in your book in the pages 60, 65, 69 and all. And they give you the example of advocacy threats and intimidation threats separately in the book. So for example, representing a client in the court, negotiating on client behalf for finance, loan of personnel from audit firm to audit client, providing valuation services, providing tax services, all can be considered as advocacy threats. Fee dependency, gives, family or personal relationship, recruitment services, employment with an audit client, litigation, all these can lead to what you call intimidation threat. And in your book, they mention about the public interest entities. Now, public interest entities are normally the large companies. Now, if you take a company like Brandix, which is a very famous company at today's context, if you take a company like Brandix, it's a public interest company. It's not a listed company. Brandix is not a listed company. All the listed companies are public listed companies. But Brandix is not a listed company, but it's a public interest company because it's a large organization. It employs a big amount of workforce. It employs it exports. It makes more revenue. So based on the revenue, based on the number of employees, based on the profit you make,
organizations are classified as public interest entities. If I take Haley's, it's a listed company, so it's a public interest company. Holding is not listed, but they are organization. Yeah, then the UK syllabus part is in your book. You don't worry too much about it. You don't need that. Then we discussed about confidentiality, conflict of interest. Which we covered. Yeah, so that basically concludes a session on ethics.